Hi guys, good afternoon and welcome to Money Control. I'm Karunya Rao and with me is Manisha Gupta and she's here today to give us an update on what's happening in the oil market. Brent crude at 1 week high, so looks like the closing will be also on a positive, on a high note for this week. What's aiding the up move?
You know, Karuna, I remember even before that last week we were talking on how crude prices have come off and maybe we can look at 2 to 3% rupees off by Diwali. Well, that doesn't seem to be the case because take a look at what has happened in 5 or 6 trading sessions. We are up by nearly 6% in case of crude oil prices. So from nearly 88, 89 on the lower side, $95 per barrel is back. And when you look at the fundamentals, those have changed quite strongly as well. The IEA report is what I'm referring to, and they are talking about higher demand in the next year. They're also saying that the global inventories have continued to decline. They also feel that with the way the population are switching from higher gas to oil, that could lead to 7 lakh barrels per day of a demand starting from October until March, and this is double of what we've seen in the previous year. So yes, this switching of gas from oil is something that the markets are really looking at quite keenly now.
But how badly does it impact us, because a significant part of our buying is happening from Russia now? So does it dent our numbers and our, whether it's the government coffers or OMCs?
So, you know, the kind of discount that first we had from Iran and then from Russia, which is a deeper one, and the kind of oil quantum that we are buying from Russia also seems to have increased quite a bit. It's not impacting us in a big way, but the overall benchmark pricing is what your prices or your discounts are based on. That starts to impact the overall calculations here, and that is what the markets are looking at. But having said that, even OPEC says that the demand growth for this year expected at 3 million barrels per day and will over above see 2.7 million barrels per day in the next year. So that means we are looking at stronger demand, and China also now getting freer of those COVID lockdowns tells you that there is demand picking up in that part of the world also.
So the uptrend will continue because yes, like you said, there are a lot of fundamental reasons and triggers playing out. Will they sustain for the next, say, till the end of this year?
That looks tough because as of now what is also supporting is the weakness in US dollar. That one has come off its highs, but you will have to wait for the 21st of September because until now we were talking about 50 basis points and then the mood turned to 75 basis points. I was reading a couple of reports, I'm sure you saw them too, that 100 basis points of a move is something that the markets also are looking at right now.
On the cards.
Yeah, because look at the US inflation that we are reacting to right now. So with all of these, there's a lot of jitteriness into the markets because that doesn't augur well. But having said that, gas prices for that matter, 9% of a jump up overnight. We are trading above $9 per MMBTU. The European Union gas prices gained up by 7.5%. So yes, it's a definite buy for gas prices, by the way. But as far as crude goes, I think we could head towards $98 first before we go back towards perhaps 88 if the demand concerns, if the high rate
and could touch 100 also.
That seems, the triple digit seems unlikely right now. Is the reason I said 98, 99 is where it could be looking at some resistance, and we could come back to 88 again if we do see higher than expected interest rate hikes, if the Chinese demand does not come back, if the US dollar rebounds yet again. So those are 2 to 3 factors to watch out for.
And is it equally concerning for consuming companies like FMCG and paints, etc., because they also import or buy a lot of oil for their manufacturing?
Absolutely. Yes, it would be because I don't think people are calculating or factoring in for prices much lower than these current 90 levels. Yes, nobody's talking about 115, but nobody's talking about 70 or 80 as well. So it is going to be between that 85, 95, 88, 98 kind of a range that we would be living with in sense of crude.
Net for this quarter, from July to September quarter, we've seen very, very wild swings coming by. So of course all of this will reflect with a lag effect on companies' financials as well. But largely the trend has been bad for them, or has it been steady? Has it been okay, something that they can pass on perhaps to the customers or absorb the shock?
So with what we've seen in the last few quarters, this quarter definitely seems to be auguring well because yes, we've majorly kept around 100 or below those kind of levels, and the last 15-20 days actually has been around 90 as a pivot point as well. So well, yes, whether the benefits can be passed to consumers is too early to say, but we have seen them consolidating as well with the expectation that we could be moving around these areas. OPEC would be very important to watch out for. That meeting also is coming in the first week of October. If the prices continue to hold around or below 90, there could be another output cut coming in from OPEC as well. So are we looking at much lower prices? Seems difficult.
Okay, well, that's the update here. 98 looks more likely than 88 for now. Let's see how things play out. Of course, next week will be a very, very critical event to see what the Fed finally does with that rate hike regime. With that, it's a wrap for today. Thank you for tuning in.